Welcome to this morning's GNCC Small Business Workshop. My name is Mishka Boltsl and I will be your moderator for the next 1.5 hours. Every business has a plan, and the eye is always, many times during the course of a month and year, is on the bottom line. And those earnings, along with cash flow, have likely never been in a more uncertain environment or have come under greater attack than over the past 8 months. Organizations have changed their complete business model and had to turn to subsidies, grants, and deferrals offered by the provincial and federal government in an effort to keep their doors open. Businesses have always needed to connect with experts when it comes to taxes and insurance. But something that we've probably never needed more than now is their expert advice. With that in mind, we are pleased to offer this morning, in partnership with Meridian Credit Union, a webinar that looks at the nuts and bolts of finances during COVID-19. Meridian Credit Union is Canada's second largest credit union of 92 locations across Ontario and 12 commercial banking centers managing over 24 billion in assets, serving just under 400,000 members, including over 25,000 small business members. Last year, Meridian Credit Union expanded the offering across Canada through the launch of Modus Bank, a fully digital national bank with members across Canada. And for the past 10 years, independent business surveys have been conducted and asking people when it comes to financing, fees, account management, and services. We have found, and they have said, that Canada's credit unions rank as the preferred financial institution of Canada's small and medium businesses all across the country. So thank you to Meridian Credit Union for all that you do, and especially during this time. And joining us from Meridian Credit Union is Brock Lewis, Senior Small Business Advisor, talking about the difference of the importance of having personal and business banking separately. Brock, over to you.
Thanks, Mary, and thanks to the GNCC for having us here today. Meridian's a proud supporter of the GNCC as well as business within the Niagara region, with over 40 business professionals in the Niagara region and over 17 locations dedicated to servicing business in Niagara. We clearly have the capability and breadth to service all business needs. Today, I'm going to obviously be speaking about the importance of maintaining a separate business account from your personal account. One of the first items I wanted to talk about was the ease of tracking transactions that a separate business account creates. One of the most important parts of maintaining a business account is the purpose of generating financial statements. Nothing's more frustrating for an accountant than receiving a statement that includes business and personal expenses. Having a separate bank account enables you to track those transactions throughout the year and provide a concise statement to your accountant at the end of the year that tracks expenses only applicable to that business for the fiscal year, making the generation of financial statements much easier for your business. Secondarily, I wanted to talk about efficient tax returns. When expenses become intermingled between business and personal, this creates the opportunity for expenses to be missed, which are tax deductible for the business. When expenses are not accurately declared, this also creates the opportunity that you may actually end up paying more in tax if your net income becomes overstated as a result of tax deductible items not actually being declared because they just weren't discovered because they were buried in a statement with other personal expense items. One of the most important things for a business is the growth of that business. And one of the things that businesses use to grow is financing. And inevitably, most businesses will require some type of financing in the future, whether it be a mortgage, line of credit, or credit card. The criteria that most financial institutions use to evaluate their ability to lend to a client or member, in the case of credit unions, is 1, financial, so financial statements that you would be generating, but 2, your established history with that institution. And one of the ways you establish that history with the institution is to have a business account and operate it as expected over a time period. It's difficult for a financial institution to determine the operations of a business based on a personal account that's been intermingled with finances of a business account. So it's very important that you build that history with the institution so that it's very easy for them to evaluate any type of credit ask or lending application you may have. Also important is your ability to accept checks into an account. Financial institutions are required by law to accept checks only into accounts with the proper name attached to them. Anti-money laundering legislation also enforces the importance of checks only being accepted into their proper corresponding accounts. In the past, you may have been able to deposit, say, Bob's Landscaping into just Bob Smith's account. That no longer is something that's acceptable to financial institutions. This also requires you to register your business name with the government to establish your business so that you can accept checks in the name of your business. In theory, someone could also actually register in your business name or already own that name. So this also serves as a risk mitigation for you to protect your business name against other individuals. One of the most important things for a business is the ability to understand their cash inflows and cash outflows on a daily basis so they can project out a month or 2 months to understand what exactly their needs are going to be over a time period. Business expenses are projectable and understandable when left on their own. However, it can become incredibly complicated to track expenses and revenues when your business becomes intermingled with your personal expenses. It's important to keep your accounts separate to be able to understand those cash inflows and outflows. And as I said before, be able to project a month or 2 months out to understand what your cash needs may be at that time. This will also enable you to be able to begin the process of sourcing capital when you may need it in the future, as opposed to coming upon a cash flow crunch in a short time period and not being able to source that money. So it's just going to provide you that buffer of time to understand what your cash needs are going to be within a time period. Finally, I'd like to finish off with a cautionary note about business accounts versus personal accounts. As we've seen, as a result of COVID, there's been many government programs that have been launched to support businesses over this time period. One of the most popular of that programs was the CEBA loan. It's a $40,000 interest-free loan, $10,000 of which is forgivable. The government did differentiate on individuals who were operating in a business account versus a personal account. So if you did not have a business account open as of March 1st, 2020, you were effectively left out in the cold and unable to access this program. There have been changes announced to the program that will enable users who've been operating out of their personal account to qualify under this program. However, a requirement will still be that they open a business account to receive those funds. And really that issue hasn't been completely resolved at this point because no financial institution has been able to administer that part of the program as of yet. So just as a reminder, the government also differentiates between personal and business accounts and how important it is. With that, I'd like to pass it back to Mishka to continue on.
Thank you so very much, Brock. Really valuable information for our audience right now in understanding the difference and where and the importance of having your personal and business finances separate and banking separate. Here to provide us insight on subsidies, grants and deferrals and insurance, and to answer your questions are Christine Berendt. She's the VP of Risk Management and Public Entity with Verge Insurance Group. Kevin Glass, Tax Analyst and Domestic Tax Services with Grant Thornton. Jack Kingma, Manager of Domestic Tax Services at Grant Thornton. Thank you all for being with us this morning. And I just wanted to let everyone know about the format today. So over the next couple of minutes, we'll have actually two presentations coming up. One of them being focused on insurance and the other one being focused on all the subsidies, grants and other aspects and deferrals that are available to you, hopefully answering some of your questions ahead of time. But then towards the end of our webinar, we will actually open up all the mics that are there so we can unmute you, or you can also utilize the chat function to ask any questions. So please, we encourage interactions, but we want to kind of see if we can leave it towards the end. So there's two presentations coming up, and the first one is by Christine Berendt with Verge Insurance. And what is the implication across the different insurance policies in the insurance industry, and what do businesses need to know when it comes to this topic? Christine began her insurance career in 1985 and joining a large international insurance company at that time. And in 2003, she decided to join Verge Insurance, where she now is a senior broker, and her account portfolio includes some of Verge's largest and most complex accounts. She's a member and holds her fellowship with both the Insurance Institute of Canada and the Risk Management Society of Canada. Christine is also a member of Registered Insurance Brokers of Ontario. Christine, all over to you.
Thank you, Mishka. Good morning and welcome to everyone attending the workshop this morning. My name is Christine Berendt from the Verge Insurance Group. I have for many years now helped business owners customize an insurance program to best suit their operations. This morning, I want to show you the various types of business insurances available and talk about how COVID has affected the insurance industry. I'd like to tell you the coverages to look for in your policy and help you better understand how it should work for you to help ensure businesses survive these challenging times. So COVID, the virus, something we cannot see, something that occurred almost 8,000 miles away, something that has affected everyone on the planet. The insurance industry, like every other, is not immune from the effects of COVID. The industry was in a hardening market that started back in 2019, as I'm sure you all felt it when it came time to renew or purchase your business insurance. And then with the pandemic hitting Canada in mid-March, it certainly added to the crisis. The results, unprecedented times. The true impact remains to be seen as each quarter passes in 2020. COVID has created upheaval in the business world and has put a spotlight on the insurance world. As well, it has changed how we all do business now. So the question, how are we doing? Are insurance companies responding to the crisis? To fully understand, please note there are different types of insurance, and to further note, there are different implications of all these different policies. Each week, each month, things are rapidly changing. And as we all become more aware of this virus and the long-term effects it will have, all businesses are learning how to manage COVID and to ensure they limit their loss and find different ways for financial relief to ensure they survive. As mentioned, there are many, many different insurance policies. All doing different things in providing compensation for different losses or damage and for illness and death. Please refer to the slide as it lists the many policies available. Of course, travel insurance. Health and life insurance, event cancellation. The largest event was planned this summer for the Summer Olympics, which were canceled. Estimated $2 billion of coverage to be compensated for that event. Trade credit insurance. Of course, workers' compensation for illness and injury. And then there is the general insurance program for the residential and personal world, and then the general insurance providing commercial policies for the business world. It is estimated Lloyd's of London, the biggest insurer in the world, will pay out an estimated $6 billion in COVID-related claims. For the sake of this discussion this morning, I will talk on specific coverages offered in business insurance policies and the various coverages within the commercial policy. Each insurer offers their own policy and their own wordings to suit your operation. Your policy becomes unique to you. There are many different types of coverages available within the commercial insurance industry. It depends on what you want to insure. There are coverages tailored to suit your operations and the exposures you have when carrying out your own business operations. Referring to that slide, the different coverages, of course, property insurance, insuring your assets, business interruption insurance, a big one in the industry, liability insurance, of course, pollution, various exclusions that exist in the policies, customized endorsements when needed, of course, D&O, very important, E&O, cyber liability, the newest one, and of course, commercial fleet. These are the coverages that are being affected by COVID. These are the coverages to look for in your own policy to see if coverage is available to you. These are some of the coverages being challenged in the industry and are the ones where claims will arise from COVID in the future. What does your policy include? The main coverage is property insurance. You all carry it to ensure you have compensation in the event of a fire or theft or perhaps water damage. There are 3 triggers that need to occur before coverage responds. There needs to be a direct loss that has occurred. It has to be caused by a covered peril such as fire, and the cause of the loss cannot be excluded by the policy. Another main coverage being discussed in the industry, the elephant in the room, is business interruption, BI. It is the one coverage that many frustrated policyholders are looking at for financial relief. Exactly what is business interruption? It is intended to indemnify you, the business owner, for loss of revenue at your business location that is as a direct result of physical damage that occurred at your property. Physical damage needs to occur at your property for a business interruption coverage to be triggered. As mentioned, this coverage, business interruption, is currently being debated in the industry and will be debated in our courts in the near future. Due to the financial impact SARS triggered back in 2003, many insurance companies now exclude virus and disease as a covered peril in the policy. If the peril is excluded, there is no coverage to apply. As well, the definition of physical damage and what is to be included under this definition continues to be challenged in our legal system. So the challenge for many is to now show that actual physical damage to your property has occurred, and if that has occurred, ensuring that damage was a direct result of a covered peril included in your policy, and that the cause was not excluded by the policy. So there is something called contingent business interruption. What is it? It's intended to protect your supply chain. Should one of your suppliers suffer a loss and cannot deliver to you your goods. However, again, with contingent BI, physical damage needs to occur. In this case, to the supplier to trigger this coverage. Liability coverage, included in all commercial policies, general liability. Many organizations could be opening themselves up to third-party liability due to the pandemic. The industry is seeing an influx of liability claims, and the insurers. So with regards to liability, there is an influx of claims. The insurance companies will go through these allegations from the third parties to determine, due to the circumstances for each liability claim, has the business owner been negligent? This has yet to be determined. However, it too will be challenged in the courts as well. Exclusions, and of course the major one, pollution exclusion. Many policies have exclusions. One big one within the general liability policy is the pollution exclusion. Pollution can be included if you need it due to the type of operations you have. However, it is purchased as a separate coverage when it's needed. The standard general liability policy excludes pollutants. Of course, it too is defined in the standard policy as to what's included. The definition of contaminant versus pollutant. Well, this will be good conversation in the future. Often when describing COVID, we hear and use the word contamination. The real question will be, can a virus be a pollutant? It is anticipated this definition will be challenged as well. D&O liability. It is insurance to protect a board of directors and the decisions they make carrying out their duties. It's anticipated these policies will have an increase in claims. E&O, also known as professional liability. It protects professionals while carrying out their professional duties. Due to the pressure and the volume currently in our healthcare system, it's anticipated there will be a big increase of claims that are bound to arise. Cyber liability, huge one. It's intended to protect your data that you hold as an organization. However, due to our new remote workforce, there is an increase in cyber attacks on many companies, which will result in cyber-related claims. And then, of course, crime, just in general. Crime tends to rise as more and more buildings become vacant. So with regards to manuscript endorsements, these are considered add-ons. They are customized from the standard policy. They provide customized coverage for certain industries. The coverage is usually unique and not offered by the standard policy. The various types of custom endorsements. It depends on your business, what you do. Prevention of access. Due to a government order, coverage may be extended to a business if they could not gain access to their building and there was a loss of revenue. Infectious disease. The coverage does exist. It's been out for years. This is something that has been offered in the industry. Of course, only industries susceptible to disease, such as healthcare facilities, would have considered purchasing such a coverage. Loss of attraction. It is insurance for when physical damage occurs on your business street by a covered peril, causing a loss of customer traffic on the street. The loss of revenue can be claimed by you, the business owner. It is worth looking at your commercial policy to understand what has been included in it. The insurance policy language differs from country to country and company to company. The UK and the US are beginning to see the class action suits arise from COVID-related losses. Canada anticipates the same thing will follow in our courts very shortly. Although many policyholders are frustrated with insurance policies, the insurance companies are responding to the crisis. They are by offering premium relief on auto premiums, should the vehicles not be used or driven less. They are allowing monthly payments to be deferred if needed. Many are offering different coverage allowances due to COVID, and as well, a reduction in business revenues. So if your sales are down, contact your broker to determine if your insurer will recalculate your premiums to reflect the change to help you pay less for your liability premium during COVID or at your renewal term. So my message, talk with your broker to discuss your specific insurance policy. We realize these are challenging times for everybody. Hopefully this information has shed some light on what is happening in the insurance industry. Thank you for your time this morning and enjoy your Wednesday.
Thank you, Christine. And for all you attending this webinar, Christine is staying with us through the course of the webinar and will answer any of your questions towards the end of it. And on that note, I am really pleased to now actually move the webinar over to Kevin Glass with Grant Thornton and to Jack Kingma, both with Grant Thornton. Kevin is a tax analyst in Grant Thornton's domestic tax practice in Southern Ontario. And he's primarily responsible for providing tax compliance services for the firm's personal tax and owner-managed business clients. His primary area of practice includes personal and corporate tax compliance, as well as emergency COVID-19 tax measures introduced by the Government of Canada, including the Emergency Wage Subsidy and the Emergency Rent Assistance Program. Kevin received his Bachelor of Accounting degree from Brock University, is a Chartered Professional Accountant and a Chartered Accountant, and is currently enrolled in the Chartered Professional Accountants of Canada in-depth tax course. And he is joined by Jack Kingma, who is the manager of domestic tax services at Grant Thornton. Jack is he's primarily responsible for providing tax compliance, tax advisory, and tax planning services for the firm's owner-managed client businesses. His primary area of practice is the succession estate planning, something that's often of great interest to our audience, but also on corporate organization, remuneration planning, and structuring business acquisitions and divestitures. Jack received his Bachelor of Accounting degree from Brock University, is a Chartered Professional Accountant and a Chartered Accountant, and has successfully completed the Chartered Professional Accountants of Canada in-depth tax course. Jack and Kevin, I'm going to pass the mic over to you to talk about subsidies, resources, and other things that are available to businesses and shed a lot of light on the announcements that have been made on Friday. Jack and Kevin, over to you.
Thanks, Mishka, and good morning, everyone. I'm going to be starting the first half of the presentation, and Jack is going to take the second half. And really here we hope to be able to shed some light on the different subsidies the government's been able to announce, as well as recently as this past Friday, as well as talk about how the progression has changed for some of them and what exactly has changed. So I'm going to share my screen. And can I just get confirmation that you guys can see my screen? Perfect. Okay, so we're gonna basically go over the different items. We've already had our introductions, so you know who we are. So I'm gonna basically take us through the Canada Emergency Wage Subsidy, the Temporary Wage Subsidy, and the Canada Emergency Rent Subsidy. And then Jack is going to finish up with the Canada Emergency Business Account, as well as some information on the Credit Availability Program. So in starting out, the Canada Emergency Wage Subsidy is probably the largest and also can be the most complicated of all the different subsidies that the government's come out with. And so I'll try and go over everything. Honestly, you could talk about this for a few hours and not cover everything. So I'm going to try and talk about what we can. And then if there's any questions at the end of all the presentations, for sure, please have those ready. So who is eligible? A lot of different eligibility for individuals, trusts, corporations, charities, not-for-profit, a lot of different businesses, and the eligibility actually got expanded to a bunch of different businesses as well. So I'm not going to go over every single one specifically, but most businesses should be able to qualify for the wage subsidy, but that's something to double check with CRA as well. So how does an eligible entity actually qualify? They have to see a decrease in revenues from the current reference period to the prior reference period, which I'll be showing a chart in the next slide, I believe. That'll shed some light on that. For qualifying revenues, there is some complicated definition related to that. It's mainly related to the core operations of the business. However, that and the nature behind it has been questioned back and forth with CRA. So that's something that you should definitely consult your accountants just to double check as that the revenue that you're actually using for the decrease is appropriate. So at an overall glance, the CEWS is equal to a percentage of eligible remuneration. For periods 1 to 4, in the first part of it, it was a strict 75% if you met the revenue threshold. Periods 5 to 10, you're looking at a maximum up to 85% for the July and August periods, and it decreases gradually after that. And it's a percentage of multiplied by eligible remuneration up to $1,129 per week. So this is a general oversight of, or overview, sorry, of the original wage subsidy that was designed. And this was for the March to June periods as well as the July and August. I'll get to the July and August in a little bit. And you can see the revenue reduction required is 15% for the March period and 30% for the other ones. And for the prior reference period, there's two methods that you can use. You can either use the related calendar month from the prior year, or you can use the average of January and February 2020's average monthly revenue, if that is better for obtaining the actual revenue reduction necessary to obtain the subsidy. And there's some calculations related to that just to make sure that you actually qualify. The key though is you are locked into the method for March to June. So you have to use the same method for every application period. July, you are allowed to do a one-time change if it's beneficial for you, but then it's locked in for all the other periods up to December. And the qualifying period to the right there is the wages related to that claim period. It's not exactly in line because it's a 4-week period the wages run off of versus the revenue runs off the calendar month. So the new CEWS rules that were announced a little while ago Essentially, there's two separate components, a base and percentage and a top-up percentage that the sum of which is your subsidy, which I'm going to go into now. So again, the July and August are in this one. I'll get to that later, but then it's also for September to December as well, this new method. And again, whatever you elect to use for the July period, you're using for all the other periods for the prior reference period election. Any revenue reduction does deem you eligible for the second Canada Emergency Wage Subsidy. And the business percentage is a factor times the revenue reduction, up to a maximum of 60% for July and August, going down to 50% for September, down to 40% for October, November, and December. The items in red were just announced actually this past Friday. So the government did increase the amount that businesses would be eligible for November and December as the virus trickled on a little bit longer than expected. And then the top-up percentage, this gets added to the base percentage to determine your actual eligibility for the subsidy. So for the July period, you would take the average monthly revenue for the previous 3 months. So that would be April, May, and June of 2020. And you would compare it to the, again, related calendar months or the January and February 2020. This selection would be the same as the base percentage. So whatever you're using as reference for the base, you would use for the top-up. The top-up is eligible for revenue reduction in excess of 50%, and it's up to a maximum of 25% for the top-up percentage. So just a kind of rough example so that you guys can see for the October, there's the revenue reduction is 50,000. So if we take the 50,000 and multiply by the October factor, which actually I can go back a slide and show you it is 0.8% here, or 0.8, sorry. If we multiply the 0.8 by the 50%, it's 40% for the base percentage. And then the reduction from July and September, we can see the average is 60%. So using that calculator, we get 12.5% top up, and we get a total subsidy of 52.5% for the October period. Now there is a deeming rule as well. For the periods 1 to 4, it was simply if you qualify for one period, you automatically qualify for the next one. So if you qualified for March, even if your revenues went up in April, you still qualify for the April subsidy. For period 5 onwards, you can use the greater revenue reduction of the current month and the previous month, which I'll now explain an example. So we can see October, the revenue actually increased from 100,000 to 250,000. So theoretically, they wouldn't be eligible for the subsidy, but they can use the revenue reduction from September of 50% in their calculation for the October subsidy. So the calculation is actually the same here, but we can see that if businesses do experience 1 month where they have an increased revenue, they still can use the previous month reduction in revenue to qualify. If in November they still increase their revenue, then they wouldn't be eligible for that period because the previous month had an increase. So the safe harbor rule, that July and August, that was applicable for both periods. It's because you can use the greater of the two. So it's important for July and August periods to calculate the subsidy under both rules, and you're eligible to take whichever one is greater. So for example, for July, we see that there's a 50% reduction. So 50% reduction for July would equal 60% subsidy times the 1.2 factor. The top-up percentage for that would be 12.5%, and the total being 72.5%. However, under the old QS rules, if you had 30% reduction, you get 75% of wages. So we can use a safe harbor rule to actually be eligible for 75% of wages rather than the 72.5. So in a general sense, it's calculated the wage subsidy as the percentage of wages plus the CPP-EI, the QPP, and the QPIP for any employees on paid leave or furloughed. You have to subtract from that any amount received from the temporary wage subsidy, which I'll discuss shortly, as well as the work share benefits. So this is kind of the funky calculation, if you will, related to it, but I'll just kind of briefly mention for this slide that The baseline remuneration is important because it factors into the calculation as 75% of it. So essentially what this calculation says is that if somebody was earning, say, $1,000 a week before COVID for the baseline remuneration period, which I'll get into in a minute, they were earning $1,000 and now they're only earning $700 because the company isn't able to pay out as much. The company can actually get a subsidy for the full $700 because it's less than 75% of the baseline remuneration. And again, for the safe harbor rule, you'll want to calculate under both of these methods just to ensure that you get the greater subsidy of the two. So essentially here, I'll point out the baseline remuneration. You typically use the January 1st to March 15th, 2020. However, if for those 2019 periods there for each of the qualifying periods, if they're actually greater, the baseline remuneration, then you can use those as the baseline remuneration reference periods to potentially be eligible for more subsidy. And the main thing I'll point out on this slide is that for the periods 1 to 4, there's no remuneration if the employees weren't working for 14 plus consecutive days. So it's important to know when you rehire employees during those periods, just to make sure that their wages would actually be eligible. If they were off for 3 weeks and then worked for 1 week during the claim period, that 1 week of wages is actually ineligible to be claimed for that period. And so recently, the deadline got extended to January 31st, 2021. And related to the Friday announcements, the queues was extended to December 19th. So there's one additional month for the December period. There's the intention to extend queues to June 2021. More information about that is supposed to be coming out at some point. We haven't really been given a timeline exactly related to that yet, but there should be a subsidy going into June 2021. And for the temporary wage subsidy, this program's actually expired, but I just wanted to bring up one quick point because clients have, and different businesses in Niagara have been asking, in case you didn't actually reduce your remittances, which was the idea behind the program, you can still apply for the 10%, and you can either request the payment at the end of the year when you're filing your T4s, or you can transfer that subsidy to next year's remittance. So that last point there. So even if you didn't actually take the 10% subsidy during the period of March 18th to June 19th, there still is the chance to get that money. And to briefly go over the Canada Emergency Rent Subsidy that was just recently announced, we know that anything in excess of 70% in lost revenue, you get 65% subsidy for rent or for mortgage interest. Revenue loss of less than 70%, it's supposed to be a gradual decrease. They haven't specified what exactly it's going to look like yet. And any businesses that are locked down by provincial regulation get an additional 25% on top of the 65. You can apply directly as tenants to CRA for this. The application will be run through CRA, and the program will mirror the queues as far as the 4-week period that it relates to. So this is just some of the information we don't know, and more information is coming out related to this. So definitely be in touch with your accountant and related financial advisor to discuss this information and just try to keep up to date as you can related to these subsidies. And now I'm going to pass it over to Jack to discuss some of the access to credit for businesses.
Okay, so I'm gonna go through now some of the programs that are available to access additional credit to assist businesses with cash flow and cash needs during the environment that's been created by the pandemic. So actually going back here, so there's 3 programs that I'm going to briefly go over. So the first one is the Canada Emergency Business Account. The second one is the Business Credit Availability Program. And the last one is Farm Credit Corporation's COVID-19 Support Program. So the first measure is the Canada Emergency Business Account. So this measure was introduced to support small business owners' immediate needs for cash flow. The application for this program has been extended to December 31st, 2020. So what this program entails is organizations are eligible to receive a loan of up to $40,000. This loan is in the form of a revolving line of credit until December 31st, 2020. At January 1st, 2021, the outstanding balance of the loan converts to a 5-year non-revolving term loan that matures in December 2025. The loan is interest-free until January 1st, 2023, after which the loan will bear interest at a rate of 5% per annum, payable monthly with the interest accruing on the last day of each month. Now, the important thing to note here as well is that if the balance is repaid by December, sorry, I'm just going to adjust my screen a second so that it's in a better view for me. Okay. So the important thing to note is that if the balance is repaid by December 31st, 2022, the remaining 25% of the loan will be forgiven. So if the max loan of $40,000 is taken, then $10,000 will be forgiven. So who is eligible for this loan? Small businesses are eligible, as well as not-for-profit organizations. There are some particular criteria for not-for-profit organizations, but generally that is who can be eligible for this loan. So other eligibility considerations. So the organization applying for the loan, so they have to have payroll between 20,000 and 1.5 million in 2019. If their payroll is below 20,000, then they can qualify if they have other eligible non-deferrable expenses between 40,000 and 1.5 million. So eligible non-deferrable expenses could include things like property tax, utilities, insurance, regular scheduled debt payments, and so on. So the organization needs to be registered with a federal tax registration number in order to apply for this loan. And they need to hold a business bank account, as Brock alluded to earlier, that's been opened on or prior to March 1st. And also they cannot be in arrears on existing borrowing facilities for more than 90 days. And yeah, there's been discussion of adding personal accounts, but that has not been completely sorted out yet. So the process to obtain the loan is that the loans are administered through the primary financial institution of the applicant. Most financial institutions now have online applications, so it can be done online, and then they review the application to see that it meets government's criteria. And if the loan is approved, then the funds are deposited directly into the business account of the organization. So announced on Friday is there's additional measures relating to this program. There is going to be an additional $20,000 loan available. Half of this $20,000 loan will be forgivable if it's repaid by June 30th, 2022. The deadline for application will be December 31st, 2020. And there will be an attestation from the applicant that they attest to the fact that they have lost income due to the pandemic. And we expect further details to be released shortly. So the next program I'm going to review is the Business Credit Availability Program, or BCAP. So this program is designed to provide small to medium enterprises with working capital, operating credit, and cash flow term loans. So there's a number of components making up this program. Some are administered by the Business Development Bank of Canada, or BDC, and others are administered by Export Development Canada, EDC. So BDC is providing payment deferrals, working capital loans, and they're doing a co-lending program. And Export Development is providing loan guarantees, export guarantees, and credit insurance. So when the two programs are combined, there's available at a max of, there's $12.5 million of additional liquidity that can be available. So the first component is working capital loans. So under this program, organizations can receive up to $2 million loan with a 3-month term, or 3-year term, or 36-month term. For the first 12 months of the loan, it's interest-only payments, after which 40% of the loan is amortized and principal and interest is paid. And then at the 36-month mark, there's a 60% balloon repayment or refinancing. So the loan can be refinanced with BDC or with your existing financial institution. So under this, as an example, if the max $2 million loan is received for the first 12 months, you'd pay interest. And then after 12 months, $800,000 of that loan would be amortized. You'd be paying principal and interest. And then the remaining 1.2 million principal of the loan would be repaid at the 36-month mark. So as far as costs relating to this loan, so normally BDC charges their prime rate plus 2%, which is around 4.5%. But this program, they are extending these loans at prime plus about 1.5% or 1.75%, which is closer to market rates, about 2.5 to 2.75%. All right, so the next program that is available is co-lending. So the co-lending program provides up to 6.25 million of loans to organizations. It's a 10-year term on the loan with a max of a 20-year amortization. It's interest only for the first 12 months. And then after that, the terms of the loan are determined by the operating lender based on the underwriting and risk rating of that operating lender. So the funding for these loans is 80% of the funding is provided by BDC, and the other 20% is provided by the operating lender. So this program is divided into 3 segments. So as far as the available credit, organizations that have under $1 million of revenue have a max of $312,500 available that they can get in credit. If the business has between 1 and 50 million in revenue, then it's 3.125 million that's available, and organizations with over 50 million in revenue have the max 6.25 million that is available to them. Just pull up this here. There, sorry. So the next segment of the program is Export Development. Canada is providing loan guarantees. So they are guaranteeing up to a max of 80% to the operating lender that is extending credit. So the term is that the guarantee is available for 12 months with 1 automatic renewal for an additional 12 months. This program was an existing program, but it's been expanded to non-exporting companies as well as part of the measures for COVID-19. And the fees attached to this is that EDC charges a fee of 1.8% per annum, in addition to the commercial loan pricing set by the operating lender that's extending the loan. So as a point of clarity here, EDC is not providing actual financing, but they're providing a guarantee on financing that's being provided by an operating lender, so like a financial institution. So the next component that EDC is providing is Export Guarantee Program. So they guarantee up to 75% of either operating or term lending, up to a maximum of $10 million American. Fees are based on risk rating, length of coverage, and required amount of financing. The last component of this program is credit insurance. So they provide insurance on receivables, specifically foreign trade receivables subject to their approval. As part of COVID, they have temporarily providing insurance on receivables of domestic customers as well. They've increased their risk tolerance based on COVID, and for a limited time, they're also covering losses for goods shipped, even if the buyer has not accepted them. So who is eligible for the BCAP program? Small to medium-sized enterprises, organizations that existed prior to March, and organizations with viable business models whose access to financing would otherwise be restricted, organizations that have exhausted the financing available through their primary financial institution. So the process to apply for this program, so it's administered through the primary financial institution of the business. So basically, businesses should work with their financial institution, and if that institution is unable to meet their funding needs, then the financial institution can work with EDC or BDC to access additional resources available under this program. So last program I'm going to go over here is the Farm Credit Corporation COVID-19 Support Program. This program offers payment deferrals and new lines of credit available to businesses in the agriculture or related industries. So Farm Credit Corporation is providing a $500,000 revolving operating line with a term of 24 months. They're also providing deferral of principal and interest payments up to 6 months for existing loans, or deferral of principal payments up to 12 months. So regarding the $500,000 revolving operating line, it's interest only for the first 24 months, and the balance must decrease to 50% of the authorized amount. So if the maximum line is received, it has to decrease to $250,000 once per year. So repayment or refinancing will take place at the end of the 24-month period. And the pricing on this operating line is prime plus 1% and no other fees. So eligibility for the Farm Credit Corporation credit facility, it's organizations that existed before March 1st that have a significant portion of revenues from agriculture related activities or agriculture itself. And it's open to Farm Credit Corporation customers and non-customers. Currently, it's not available to industries such as hospitality, tourism, bars, full service restaurants, and the cannabis industry. Basically, under this program is assessed on a case-by-case basis, and it's subject to Farm Credit Corporation's regular lending due diligence procedures. So now just additional resources. So Grant Thornton on their website has a resource hub for all things COVID-19 that has a lot of good information on the various measures that have been introduced since the pandemic began. And that brings me to the end of our presentation. So if anyone has any questions, please let us know.
Kevin, Jack, thank you so very much for your presentation. I have found this information so valuable because on a daily basis, we hear from members and businesses across Niagara asking many questions that you actually were able to answer here, especially many questions as it relates to the wage subsidy. It is quite confusing for many small businesses to look at. But we've had a couple of questions, and now so we're going over to our Q&A segment of our workshop this morning. And we've had a few questions that have come in, and I thought I'll start off with one, Christine, that was actually directed towards you. Some experts are saying that having cyber insurance will make you a target because the cyber criminal thinks they are more likely to get paid if they go after a company with cyber insurance. What are your thoughts on this one, and how important is it during these times that businesses who've never considered cyber insurance to actually get cyber insurance?
Sure. And a good question. Well, we all don't know each other's insurance policies that we carry. So does someone really know that you carry cyber liability? Probably not. One thing to keep in mind with cyber, in November 1st of 2018, a new digital act came into play in Canada. It was something that existed in the UK and in the States for the last 10 years. And it's basically a requirement for everyone in Canada to self-report themselves should they have a data breach. So any organization, of course, we've seen the big ones such as Target retail store, Sony, they all had to report themselves. So that requirement now exists for us. So as you are an organization that deals with a data breach, you have to self-report yourself, and you have to advise all the third parties that could have been affected by your data, such as their financial information, their names, addresses, and there's a cost associated to get to your third parties to report, and all those costs are covered by a cyber policy. A cyber policy, should a fraudster use your information and do something to a third party, that there is indemnity to protect you as the organization that suffered the breach under the policy. Fines are covered by the policies. So the Digital Act, which is governed by PIPEDA, can fine you. So there are some really good things that a cyber policy provides. And just to mention, it does two main things. It protects you for loss of data, but the second item, it provides computer fraud. And those are phishing emails. It's the #1 loss cyber carriers are experiencing are the losses to do with computer fraud. It is the new robbery, so to speak.
Yeah. It's true. We had a whole separate webinar at one point just on that particular topic, and it has raised a lot of questions in the business community and how to best protect themselves and to ensure that they have the internal policies in place to ensure that the procedures are being managed correctly by all individuals and by all staff. I believe, Kevin, this might be a question for you. It has come forward from a solopreneur and who has experienced quite a substantial loss of service and sales during that period of time. And his question is, how can he strengthen his business and their cash flow during this period of time, while many of the services that he had previously offered actually have ceased slightly, or people are delaying and paying their own invoices from him? What are the subsidies maybe that are available to this individual to strengthen their cash flow in the short term?
Yeah, and thank you for the question. It's a really great question. It's a question that a lot of especially small businesses, mom and pop shops definitely have during this time. Is, you know, to a certain extent, where's the money? They're not getting money from, you know, their normal sources, so they need some way to be able to survive. And that's kind of what these subsidies are trying to be designed to do. So you have the wage subsidy that's trying to be able to support businesses with some of their wages. You have the rent subsidy that hopefully is able to help with some of the rent and mortgage interest that businesses may have as costs. For other costs, there's different programs that we kind of mentioned, like the SEBA, and there's a ton of different resources related to different programs, and as well as regional relief. There's RRRF that we didn't have the chance to get too far into today, but there's a regional relief fund that is specifically designed for to help smaller businesses, and there's constantly new information coming out about different resources. And I know, for example, just the other day, Doug Ford was making announcements that there's supposed to be some more help coming to small businesses, like more specifically the restaurant business and different service businesses related to that. So there's always different stuff coming out. My best recommendation would be to get in touch with your accountant, or as Jack mentioned, Grant Thornton. We've been really good with updating our COVID hub with the latest information that's available on government subsidies and opportunities to get funding from the government, and just to help businesses to actually stay afloat during this period and to get through it together and come out not just surviving, but really thriving in the current work environment.
Yeah, I fully appreciate it. And we have directed, when people have especially such detailed questions, we do direct them to their financial institution, to their accountants, to their tax advisors, to take a look at how and what decisions they need to make to ensure that they have a steady cash flow for the upcoming months that are there. Jack, this one is maybe something that you would like to tackle, and that has to do with the Canada Emergency Business Loan. So we initially saw a $40,000 loan, and now the government has opened up an additional $20,000 loan. And the questions come forward from a local business, and she's asking, how does it have to be used, and what do they have to show, and how this $20,000 or $40,000 loan has been used within their business?
Yeah, so the criteria for the new $20,000 loan would fall in line with the existing $40,000 loan. So you need to have enough documentation that you can show that you're using those funds to pay for non-deferrable expenses. So that's operating expenses. I listed a few of them in my presentation, right? So it could be things like property tax, insurance, it could be rent, it could be regular scheduled debt payments. So there's more as well, and there is information available on the Canada Revenue Agency website as well. They have pretty extensive resources there as well as to what is all included in non-deferrable expenses.
That's helpful actually for people to know. So to basically saying, don't just put it in a savings account, but you really do have to actually use it within your operation that you have. Christine, this one is an interesting one. We're seeing that the workforce is slightly changing by working more from home than they have in the past. And it's something that had started out early in March and April, but something that is consistently in place all throughout. And I think at one point there were some numbers out indicating that there's still over 3 million Canadians that are actually currently working from home. And from an employer's point of view, how does their insurance need to change to ensure that those individuals that are working from home, that are likely falling under the health and safety regulations of their employer, what decisions do employers need to make when it comes to their insurance?
Yes, good question. I think it affects a few different types of insurance. Certainly from, if we're speaking of workers' compensation, there's that area of the insurance. However, the general liability of an employer extends to wherever the employees are, whether that be in their physical building at, somewhere downtown St. Catharines, or whether those operations are carried out at your house or my house, or another location in Niagara or Burlington, and so on. So the general liability of a commercial policy extends to where the employees are carrying out their operations. It's the property insurance that's just insuring that building, that office building, that manufacturing plant, that hotel, that restaurant, that is sitting there, right? So we got property insurance, the general liability insurance, there's WSIB. Many insurances get wrapped in that question.
Yeah, I agree with you. And it's a complicated one. There's also the aspect of the employer's responsibility to keep their employees safe at the same time.
Absolutely.
Yeah.
Yes,
I don't
absolutely.
know if you're getting a lot of questions on this particular issue too, when it comes to their insurance.
Yes. Yes, and anyone can contact me if they have specific, certainly welcome that.
Okay, that sounds really good. Maybe either Jack or Kevin, this particular one goes back to the Canada Emergency Wage Subsidy and the rather complicated way of calculating it out. And one of the questions that has come forward, how can an employer determine the qualifying revenues? And I know, Kevin, you touched on a couple of areas of it. Could you quickly summarize for us again of what falls under a qualifying revenue?
Absolutely, I can definitely shed some light on that, and thank you for the question. And really, ultimately, it's revenue that flows from your main operations. So it's first of all, no expenses or costs of goods sold or anything like that is taken into consideration in the calculations, and it's just stuff from your regular operations. So certain things that aren't related to your actual operations, such as maybe interest earned on a bank account or a GIC or different stuff like that, wouldn't necessarily be factored into the calculation. The actual recommendation is related to the inflows of funds generated from ordinary business activities, is the way that CRA roughly has interpreted it. So essentially, you're looking at your gross revenues from your operating activities. But at the same time, if you would like some confirmation about that, I would definitely just maybe double check with your financial advisor just to make sure that there's nothing that could be questionable within those revenues. But I would say as a general rule of thumb, typically your gross revenues from your operating and active business activities would be the relevant revenue numbers to be used.
Yeah, that makes sense. Kevin, on the same topic, there are two follow-up questions that kind of are around the same topic. So I thought maybe I'll pass them both on to you, but it's the first question was, how long until an employer can expect payment of the wage subsidy?
Absolutely. So CRA has indicated about 2 weeks. Now, in practicality, that's typically the time period that people should be maybe expecting at the later end. But at the same time, CRA is really emphasizing people be registered for direct deposit. So if your business is registered for direct deposit already with your payroll account, then CRA will deposit those funds. In my experience, it's been about maybe a few business days for people to receive the funds. They're processing them really fast because they understand that, you know, businesses need this money now, and it's not a question of, like a few weeks. It's a question of days that they really need this money. So CRA has been pretty good with getting it quickly. So I would also recommend that if your business isn't set up with direct deposit, now is probably a good time to start to have that conversation and to get registered so that you'd be able to get those funds faster.
Makes full sense. And here's the second part on the same topic is if someone has not yet applied for wage subsidy, but they do qualify, can they retroactively go back and qualifying it for months that have already passed?
Yeah, and the answer is a resounding yes. And the application deadline of January 31st, 2021 is actually for all of the wage subsidy application periods. So you can go all the way back to the March period and apply for each one basically together through CRA. You do have to submit the applications for each period separately, but the January 31st, 2021 deadline is actually for all previous periods. So if you haven't filed any up to this point, you qualify all the way back to March, then you can definitely file the March, April, May, and all the subsequent ones.
Okay, that's extremely helpful. So thank you for that. And Jack, if I could ask you this question, or this is coming forward, and I think it is really speaking to the pulse that so many businesses have experienced, is that they had to rewrite their business plan and rewrite it again and adjust to it again. And we're now in the second wave, which historically, when looking at pandemics, has been considered a tougher one than the first one. How can businesses prepare themselves? So if someone, and how can a financial advisor, a tax advisor help a business as we are in the second wave and again faced with a high level of uncertainty?
Yeah, that's a big question. Thanks for the question, though. But yeah, I think working with your team and altering your plan as you go, and the biggest thing too is just managing your cash flow as best you can. So that means kind of, staying on top of, if you're a company that has a lot of receivables, that you stay on top of that collection. And also, that you extend your payables as much as you can to kind of keep the cash flow in check. So, I mean, it's very particular to each business. Each business's situation is very different. So, working in your particular environment with your advisors and your management, and just trying to find a way forward. It's definitely challenging times for everyone, and for some industries more than others.
Yeah, I agree with you. And I do appreciate your advice of saying, like, connect with your financial institution, connect with your financial advisor, your tax advisor, and share some of those thoughts and struggles that actually you might have, because there might be opportunities you would have never considered them beforehand. And I think this is the time to tap into that, because it might result into a subsidy, in a grant, in other resources that will assist businesses. Seeing this one is an interesting one. It's coming to you, and I think it was based, the participant actually talked about the news about Shaw Theatre in Naga-on-the-Lake, of them having had for the last 2 or 3 years, business interruption insurance. And with them having that insurance, it allowed them to keep their staff on during these very difficult times that they have. It has made the news nationally. And is this business interruption insurance something that businesses need to consider, and what does it cover?
So there are variances of business interruption insurance. There are many policyholders that are not getting a response to that coverage, that being because no physical damage occurred at the premises. The virus absolutely affected their business, but there was no fire, there was no water damage. However, there are different industries, perhaps such as them in Niagara-on-the-Lake, that purchased a policy that allowed that. So there did not have to be that component of physical damage at the premises to get reimbursed for either loss of revenue, perhaps payroll, extra expenses they incurred to get through the crisis. So it's quite hard to say exactly what policy that organization held, but again, they're so unique to us all. And that's absolutely great news because they're a great organization, and you know, they did, like all you know, theaters, we could not get together in the summer. So if they're surviving due to some relief, that is good news.
Yeah, I think it was good news too. And I think it made, I think, organizations aware, and especially a lot of nonprofits and charities aware, to actually looking at and say, like, I do need to review my insurance policy regularly. It should be part of an annual plan to do anyways. But we have encouraged nonprofits and all organizations actually to review their insurance to ensure that they are properly insured. And then if they have questions, to get in touch with their insurance company to explore the options that are available to them.
Yes, no, great advice for them.
Yeah. Kevin, I think this one is maybe to you. It's regarding the Canada Emergency Rent subsidy that is there. Previously, your slide indicated that you had to have a loss of 70% or higher to be able to qualify. This particular one, the new announcement goes directly to the tenant, and now you had indicated it can be less than 70%. There's no news on that sliding scale or the impact yet, but do you have an idea of when we can expect, or when business can expect that information, as it is critical to them?
Yeah, it's a great question, and you know, thank you for it. Definitely applying through the tenant is the better option, and I'm glad that the government is doing it that way. I'm eagerly anticipating it as well, because I know that there's several businesses that really do need this subsidy. The details, I do not know specifically the exact days when they're going to be released. Hopefully it should be sometime soon, because again, they know that businesses need these funds. But they have indicated that if you have less than 70%, that it will decrease on a sliding scale. So it sounds like, to a certain extent, there should be some portion that you should be able to get. There's like some talks about what it might potentially be, but nothing's really been confirmed by the government at this time. So my best advice would just be to kind of keep an eye out for if there's any news that does come out related to that. And as has been mentioned, continue to keep in touch with your financial advisor, because like I know, like Jack and I were basically like watching every single presentation by the government at this point, because you know, every single day something new is coming out. So definitely keep an eye out. I don't have an exact timeline, but it should not be a long time before we get more details related to that.
And we do have a quick follow-up question on this one that has come in, and it's being asked, for how long will the rent subsidy be in place, this new one?
Yeah, so the rent subsidy, the new one is expected to be in place until June of 2021. And there's no indication that there's expected to be any changes to the regulations. That's not to say that there won't be, but these current regulations essentially are expected to be extended to June 2021.
Thank you very much. And from when I look at my list and the texts that have come in and the questions that have come in, so we are at the end of the question period here. And one of the ways that we usually wrap up our webinar series, and I think it's maybe a good way to wrap up our workshop this morning too, is giving each one of you a minute to maybe for some closing comments or anything that you would like to share with participants here. And maybe to start out with, I'm going to start out with you, Jack. You were the last to present and maybe the first one for the closing comments.
Yeah, I just want to say thanks for the opportunity to be able to do this presentation. And yeah, we're definitely living in challenging times for sure. And I think it's important that we try to stay connected with our community and colleagues during this time also when we're isolated from one another. So.
Yeah, it's so true, actually. It is a whole new way of connecting and doing business. And especially when it comes to financial advice and transaction and others, it's quite a very different and a new way of us moving forward. And Kevin, over to you.
Yeah, and I'd echo Jack's comments and say thanks for this opportunity to be able to help you guys with understanding the different subsidies and everything related to them. The only thing I would just kind of try to encourage people is you're not alone in this. Every business is going through some sort of difficulty during this time, whether it's loss in revenues, whether it's completely transforming how we do business as a whole. And so, you know, I would just kind of encourage you guys by just reminding everyone we're all in this together, and you know we're gonna come out of this really ahead actually, and you know we're here every single step of the way, your financial advisors and everything. So please, if you guys have any questions, and even if you don't, be in constant contact with your financial advisor and accountant, just to say hi and just to kind of update them how everything's going.
I really appreciate your comment about the sense that we're all in this together. You're so true about that. And I think that we make better decisions when we actually consult and connect with people who can help us out, even if we just have an idea or a suggestion saying like, does this apply to me or not? I think we make better decisions when we consult and when we get the experts at the table. If it's legal advice, insurance advice, financial advice, I think it's critical. Even digital marketing and communication advice, all aspects of it right now will shape an organization and will strengthen an organization. And Christine, you were the first one to officially present. Over to you.
Well, thank you for having me, reiterating what Kevin and Jack said. Yes, you know, I have to say that both taxes and insurance are complex subjects, and you know, it gets confusing what's happening out there, and there are two industries that have certainly been affected. I welcome any calls to the office if I can help with your commercial insurance. You know, yeah, and I wish everyone to stay well in these tough times.
Thank you so very much. Thank you to all of you, Christine with Verge Insurance, and Jack and Kevin with Thornton, for being with us this morning. Your information has been really helpful. I know that there's a lot of detail in it, and sometimes it looks like it could be dry, but it's so critical because the information that you've shared will determine actually the success that a business is experiencing, not only today, but tomorrow and in the months to come. My personal thanks and the thanks on behalf of my colleagues goes to Meridian Credit Union, an amazing partner celebrating Small Business Months that we're holding right now in the month of October in Canada. Thank you for all that you do for the community. Today's webinar will be available on our website at gncc.ca, as well as it will be distributed to everyone who attended today, as well as through our social media channels that we have. We talked a lot about subsidies and resources. Much of it is available on Thornton's side, as it had been mentioned, but please feel free to check out our either daily updates or gncc.ca. We have a complete section on COVID-19 subsidies, resources, and information that is hopefully there to make your decision-making easier. So to all participants, thank you for being with us this morning and for joining us. Please stay in touch and have a wonderful day.